Hello everyone, Larry Leverage for Ichimoku.co and ForexTrading.tv with a daily analysis for the SP 500 for the trading day ending Thursday, December 5th, 2013. Well, a shift in control back to the sellers today. For the previous day's trading, even though we had a downtrend in place, we had the buyers take control of the market and suggested that there was a possibility of a change of trend to the upside. We were looking for a higher high and a higher low, but if you recall, I suggested that the area of resistance around 1800 would be quite strong for this market. Now, we haven't seen this market trade anywhere near the 1800 level today. The buyers just haven't been strong enough, and with this large black body, it suggests that in net terms momentum has shifted back to the sellers again. It does suggest a possibility of lower price levels. The trend technically hasn't changed here. We have an inside day in bar chart terms, and that's a bar with a lower high but a higher low, and therefore doesn't continue the trend. And technically it does suggest that the downtrend that's in place is in doubt, and that's because the sellers haven't been strong enough to take out the previous low. If we're looking at the short-term dynamics, however, with the sellers taking control and being committed throughout the trading day and gaining some net momentum in terms of the black body, it does suggest that the potential for a change of trend isn't as strong as one might think. This market here has very solid resistance overhead, with the Tenkan-sen trading close by around the 1796 level and the 1800 round number level, but also strong support just below, with the Kijun-sen trading at 1779, 1780, and the previous resistance and then support level at 1775. So a market that's bound by close by resistance but close by support. In terms of the Fibonacci extension, an interesting bearish close down below the 100% level, where the market was rejected from below the 100% level for the past two trading days. Today a bearish close below, and it does suggest a possibility of the market trading lower. So if we do breach the Kijun-sen at 1780, the target here is the 161.8% level at 1772. And that 1772 level corresponds roughly with this swing high and then swing low around 1775, so strengthening the potential support around this area. In terms of the Fibonacci retracement, we've traded just to the 78.6% level, previously rejected from the 100% level, and if the market can trade through the 78.6% level, the target here is the 100% level around 1777. So if this confluence of support around this 1777 to 1775 level, roughly, with the Kijun-sen involved there as well, and it does suggest that if this market does continue trending down, then we will need to see some very solid momentum in net terms to the downside by the sellers to take out this 1775 level. Now, in terms of Ichimoku, a bearish market in the long-term time frame, with the market trading below the cloud. The market's sorry, that should be a bullish market in the long-term time frame, my error, trading above the cloud, and has been trading above the cloud for some time, and was looking a little overextended, and therefore we're having the retracement back towards the equilibrium suggested by the cloud in the long-term time frame. The market's trading just above the Kijun-sen, so we have a bullish market in the medium-term time frame, and that Kijun-sen has been pointing flat for some time, and very often price action is attracted back towards a flat Kijun-sen, and that's exactly what we're seeing here. The market is interestingly maintaining price action down below the Tenkan-sen, and that may suggest that there has been a change in sentiment in this market, and suggests the possibility of the price action trading to lower levels. So possibility of the market perhaps testing down to this 1775 level and watching how the market behaves down there. So really, moving forward, we do need to watch that area down to around that 1775 level, and in this zone of confluence with the Fibonacci target and the Kijun-sen trading in this area. If we see solid bearish activity down below there, we could see the market testing down to the 1760 level, or even beyond, down to the 1746 level. But if the market does attempt to rally, we have very solid resistance overhead at the round number 1800 and just below at the Tenkan-sen.